Good evening, all. Ira Epstein with your SPDR ETF stock market wrap-up. And this wrap-up is for the evening, as we're here now on Tuesday, the 23rd of May, 2023. So, still, we're at an impasse. You know, last night before tonight, obviously, it was Monday evening, I said I saw the press conference, or the press conference that Speaker McCarthy held after his meeting with the president. And as pleasant as he was, I said he said no to everything. I mean, everything. So when you take a look at the impasse as to where they're at, overall spending, no. The Republicans do not want that. There's not going to be an increase. They want a rollback. Then within the rollback, they want more spent on defense versus social spending. That's a negotiating point. But how long of a rollback? How many years will they agree to a package on? The White House most certainly wants the shortest package possible so that they get the president into office, they try to take over Congress again in full, and they can get his agendas going. The Republicans, I'd put my foot down on that one. I think they're going to get more than 2 years, and that's another impasse. Work requirements. I think that, what's happened here is there's a certain element within the Democratic Party, leave everything as it is. And the Republicans are saying able-bodied men and women, I want to make that clear, that can work should do a minimum of X amount, that's part of the proposal, to get social benefits. Then we have Congress getting ready to leave. These guys, they're going to hop on that plane come Thursday, and they're going to spend Memorial Day with their families. Now, we have obviously summer break coming right behind it, but everybody knows you got to get this done. We also have the point where Mr. McCarthy doesn't want to invoke or take away the 3-day rule in the House. That's a negotiating point that he might have to do. And there's a couple other small points that are there that can be done. But the point is, it gets bigger than this. I don't think that there's, within the Republican Party, belief in Miss Yellen. I think all the way through, she doesn't carry the weight within the party that other past non-Republican U.S. Treasury secretaries have carried. I don't know why. She was a Fed chairperson. She's got all the credentials, but I get that impression. I've had it all the way through since she took this job on, and I've mentioned it in my reports. It is not me against it. It's something that it's clear to see. So what's happened already in this bluff poker game, and that's what we're in, Republicans are saying, yeah, she's giving you an approximate June 1st date, but I'm going to go with J.P. Morgan, Bank America, Goldman, whatever the analysts there are saying. And now they all think we got to the 8th, maybe to the 13th. And at that point, we get some state taxes that come in, and suddenly the Treasury has more money. We can afford to push the envelope. That's what's going on. This is the envelope pushing. And what will eventually happen is you're going to get companies like Standard & Poor's and Moody's come out on the debt rating, and sooner rather than later, they have to say, guys, we're going to have to lower the U.S. ratings. And maybe you need an outside something to happen because that's going to cost real money, and interest rates will go up. Are the naysayers at work? Every day, no matter if it's the Fed, for how many months have we gone up in interest rates from 0 to 5.25% on every break off of the rate hike? They buy, and they've been right. Don't say they're wrong. On the indices, they have been right. I'm not saying individual stocks. Okay, fighting them doesn't make sense. You learn that pretty fast if you've been doing that. Doesn't mean I fundamentally agree with them. No, but I can see the result. So they're doing it here too. And yesterday you had a break in all the indices. It's not even a 1% break. So I see the roll that happened, but you got to be careful with that. Now, when we come over, I decided to add a different chart this time. Southwest Energy, your daily bar chart. What this is all about is natural gas. And I think natural gas, as you know, I've been saying, I think if you look at it long term, I think it's given you a bottom. I think it's going to become an important commodity down the road here. And it's something we should pay attention to. When you look at the pattern, you have higher lows, higher highs, it's bullish. When I look at the moving averages, well, you're at the first resistance. You cleared the 100. Support's all the way back at the 18-day average. And where the market's stopping is the Bollinger Band, as it typically does. Momentum-wise, you're overbought. So I can make the argument you've had an uptrend. You came from the 440, 450 level, let's call it, all the way up here to 550. You had a dollar rally. The market's due to set back about half of that from what I'm seeing. But I think you have to start looking at this, Chesapeake and some of the others. I think there's interesting plays there. Then I go to Schwab. All right, I think Schwab's going to peak out against the upper Bollinger Band on this level of the run. Why? Because that's what you often do when you get to Bollinger Band tops. You came off the bottom here, right through here. I know I said it. My videos are still there. I said I think we're seeing a bottom form in this market. And we did, as it turns out. And the market's back up here. I'm not looking for a bear market in this again. I'm looking for the market to build over time and be able to work higher. In the gasoline fund, well, today I think the pros are getting ready to step out. The high was 61.28. The upper Bollinger Band, 61.49. You're in that zone where I think there's going to be some money taken off the table. I saw today in gasoline in Illinois. I can't go on the whole country, but I live here, so talking about it. We're $1 a gallon cheaper than we were for last Memorial Day. That, gives people the incentive to drive. The weather's going to be gorgeous. Have you taken a look at the next week of weather? I know in the Midwest, we are just absolutely stunningly beautiful. Tesla, heck of a ride, but I don't think the market's got the power to just stay over the upper Bollinger Band. It's not a trend trade. It's a vertical price move to the upside that bottomed out at the 18-day average. Will it embed? Well, you need more days than this to do it. If it reaches higher, 2017, back to the 200 level possibly. And I do see excellent support between 173 and 170 in the market. Now, all these moves and talks that I'm making are obviously predicated that the U.S. doesn't go into a default situation. At that point, I don't want to have anything. I don't know what a default really means. I don't know what it does in the marketplace. I can tell you I haven't gone through one. In XLF, higher lows, higher highs, right back to the neutral zone. So for the financial sector, market's not doing bad. Have you watched some of these banks? They were up 20% one day, 5% another. The banking crisis is behind them. Yes, we might get the things developed, but that crisis is behind the banks if we don't get into a default and if interest rates don't get crazy because of it. Because if they do, what stops that from showing up again? I don't know. I can run to my local bank and get an 11-month CD for almost 6%. I can put money in a 30-day T-bill and get 5.25%. There's opportunities galore, but they're short term. And that's the difference. So I heard today as analysts were saying, yeah, you can do that, but remember, they're short term. I don't know what's wrong with short term right now. I don't know that this market's going to get beyond all this. We have a presidential election coming next year. Who knows what that's going to offer us? So there's a lot of unknowns. In the semiconductors, just power. What else can you say? I mean, this is your new AI. This is the thing. And yes, you will eventually get sharp reactions. The market will get ahead of itself. But I can already see the argument that this whole area is going to be the support. You're embedding, I think, on the breaks. The traders are aggressive in there trying to buy it. And if they get stopped out once, that's okay. They'll keep coming at it. But I think they recognize that they're waiting for the pullbacks to nibble into. Home builders. I saw the sales today. They look phenomenal, and yet you couldn't go anywhere with it. But I really think what's happened here is you're just in a caught between the upper and lower Bollinger Band and sideways action. And for those of you that take or have taken my Bollinger Band course, this is exactly what I teach. Sideways markets, you start churning and you start scratching yourself. Why am I not getting follow through? Because you only stay over the top band 5% or under the bottom band 5%. You're doing what you did here. You finally pushed out to a new level, and you're going back into what you did here, that bit of a chop. That's what I'm expecting is going on. On the energy sector, the trade is trying to buy the energy here at 79.80. Stops will be under this low right through here, I think the 79.19 level, and I think they'd like to reach up there. Now, if you saw this morning, early. I think it was 4 or 5 in the morning. I was watching Bloomberg, and I was watching the event taking place in Qatar as they had on the energy ministers of Saudi Arabia, Iraq, some other countries. And there was a distinct message from the Saudi minister. He looked into the cameras and he said, we see how the market is betting against crude oil holding. In other words, he's looking at the futures, the open interest. Every Friday, the CFTC releases who owns what and the big shorts and who's doing what. And he said, you're going to be very wrong. Here's your threat. You got a June 4th production meeting. They could be cutting back production. It's very scary, okay? Be careful here. These people, they're not your friend, guys. They're out to produce and keep their prices. I think they want to defend the $75 mark. So that's what I'm looking at. And obviously, if we get past the debt ceiling, well, it's going to be hard to want to be over bearish at that point. I know everybody says a recession in the U.S. coming, everybody, but everybody also says it's going to be shallow. Somewhere along the line, not everybody's going to be right. In the gold, we fell to the lower Bollinger Band. So to get a bounce out of there, why not? You're oversold. But I don't see anything bullish just yet. Silver, you were running the band down to the 100-day average in that. And when I was back, what did I say? I said, you don't want to press that. You have an embedded reading. You'll get opportunities. If you're going to do it, be short over that number if you embed. Did we embed? So let's take a look. Both numbers today are under 20. Both numbers under 20. Both under 20. And the day before. So you're embedded. So the rallies that you're getting are being sold. And this is your profit-taking zone. The 100-day average. To stay under it, it's hard to get under it the first attack of it. If you go back, you can see. When you finally got over it, you flipped, and you haven't been under it, by the way, since back here in March. So that just gives you an idea with that. Copper, still bearish. If you're reading anything on China, how slow and miserable their economy is, it's there. They haven't done anything with the banking yet to ease money. I'm waiting to see. Not embedded yet, still just washing itself out to the downside. BND, I'll let you want to own this, not me. This is a bearish play. It's oversold. I don't like pressing under these key averages, but this is all about default. And if we don't go into the default, all of a sudden these things pop on you. So you got to be very careful. Will you be able to dodge that bullet is the question. Dollar, everybody's buying the dollar. Why not? If the world's going to see the U.S. go into a default and it has that ripple effect instantly on everybody's currency, their interest rates, this is the place you want. You want the strongest economy. That's what's been going on. And that's why bonds and notes are adding yield. And this is the weakness you're getting out of that in the euro. But that first challenge, throw world events out. I don't like being short on the first challenge under a 100-day average. So I put it all together, try to come up with a game plan, and that's what you do. Now, if you want to learn more, go to our website, iraepstein.com. The free offers and all the courses are there in education. In the meantime, I'm Ira. You have a good evening. I'll see you in the morning.